All right, so we have another sell-off on Wall Street. We got 2 bounce days, and now right back down we go. And the kicker today, and one of the reasons why you can see this market is so weak, is because not only did we go down today, but we erased the entirety of yesterday's rally and then some. And these type of things are very, very key. All right, follow me over to the big board. Let's take a look at where things are standing here. We have the Dow down about 243 points. NASDAQ is really taking the brunt here, down 307 points, or about 1.75%. S&P is down 1%, or 59 points. Oil down slightly, started out higher today, but kind of reversed. Gold, again, new all-time highs, although I will say this has now hit my key target level, the high end of a parallel channel. And lastly, Bitcoin down. Remember, when the stock market goes down in general, crypto goes down, and we're seeing that today on Bitcoin. Looking at the heat map, a couple areas of decent action. If you look here at the financials, there are some green and kind of gray areas. Gray means around the flat line. Green is obviously positive. There's also some red in there as well. But compare that to technology here and here, way, way, way more red. And that tells you, again, today is a tech-led sell-off. If we look again at the NASDAQ right here, down 1.75% versus the NASDAQ, or I should say the Dow, down just 0.6%. And the S&P down just 1%. All right. Now, if we look at the charts, this is kind of one of the things we were talking about just at the start, is that here we have the down day. Now, granted, this could all change tomorrow at 2 p.m. when the Federal Reserve announces their policy decision and the press conference with Jerome Powell, right? So is Jerome Powell tomorrow going to tell us, oh, hey, we'll cut rates more aggressively, we're not so concerned about inflation and tariffs? Or is he going to say, hey, we got to wait and see, this is getting a little crazy here? That's going to determine our next move. But needless to say, 2 bounce days. Look at from this high here at the highs of the market to this low. If that's the best the market can muster, that's not very good, and that tells you what type of market we're in what type of environment we're in. Now, again, this still will remain support right here, but tomorrow, I have a feeling by trading the close, we're going to know, are we going to continue the rally and turn back up, or are we going to come down and take out this major support? If we do, I said this morning, but my next big target would be basically down to the August low from this big correction down here. That would be your next technical level. And again, one of the things we're seeing as we go back to the computer here is that we are seeing a lot of stocks in the tech sector go down. In fact, this is a line that I pointed out to you guys yesterday as well. The breakdown, the retrace to the scene of the crime, and the rejection, and down it comes, right? Again, just knowing this trend lines here makes such a difference in your decision making as a trader, whether you go long or short or just stay on the sidelines. But beautiful example of a break below support, which was, this was support, right? Breaks below, then revisits, and this now becomes resistance, and it rejects price. Apple today, fractionally lower, the head and shoulders fully intact, could be starting to make a bear flag. Again, I have my downside target, first target, just below 200. And then Tesla, again, coming down today, kind of holding this first level of support. But again, I'm now looking for maybe one more push down here to the low 200s. This, again, there's a gap fill right here, which will be a key level to watch. Now, one of the things I'm noticing is that the high flyers are just, when the market bounces, they get bounces here. But again, when the market drops, these things are getting crushed. Carvana, going back to the charts, is exactly that, down 10.5% today after a nice couple-day rally. But look at how fast it comes back to the recent lows. APP is another example of that as well. Again, down about 9% today after a little bit of a bounce. But these are kind of these former high flyers, the Robinhoods, the APPs, the other names like this, even RCL, Royal Caribbean, same kind of deal here. It was kind of a high flyer for a long period of time, and then look, it gets the bounce, but how quickly does this now crash right back down and ultimately most likely continue down in correction territory, all right? Now, one of the big movers amongst the mega caps today was Google, which was at one point down over 5%. It did rally back off of the lows, but I'll show you my level I'm keeping a very close eye on. Right down here, there's a gap fill at 151 and a double bottom at just below 150 at 148. This would be a great, in my opinion, swing trading opportunity opportunity if we continue to see a drop. Now, Alphabet/Google down 23% from its highs in just early February. And remember, this is a $1 trillion company. So these type of drops, and we've seen this on Apple, we've seen this on Amazon. I can bring up the Amazon chart as well. These type of drops have just been absolutely massive. And you can see here on Amazon, look at this, guys. Again, here was your wedge pattern. It breaks, and then look at the waterfall effect to a tune of 20% since basically early February. So these are massive declines. Again, there's something called the wealth effect, which is what I was arguing of why the economy was holding up over the last 6 to 12 months is because, listen, even if the economy itself wasn't doing the greatest, consumer spending, especially amongst mid to high-end income earners that had big investments, they were just continuing to spend. It seemed like it would never stop because, again, they looked at their 401ks and they're like, holy crap, I'm up another 5% this month. Let me go out and buy a new TV, or let me go buy a new car, or let me go take another vacation. Now you're seeing the reverse wealth effect, which is going to slow the economy even more unless the markets can start rallying back to all-time highs. But again, as of now, we're going to watch and see what happens here. I'm not expecting new all-time highs potentially for a long time. Bitcoin, again, down on the day here. You can see, again, down, stock market's down. You should just almost assume Bitcoin's down. It's almost a rarity when Bitcoin's not down, when the stock market's down, risk on, risk off. Again, the technical support zone is right down here. All of these high pivots, any sort of flush into this area should be major support. Resistance remains right up here. Gold today, this is the big one, and this is the fun one to go over. Gold is now officially at my upside short-term target. Let's take a look at the big board here. I'll walk over here. So what we have very clearly is this parallel channel, right? We can see very clearly down here through the lows, and then we drag a parallel up, and it goes exactly to this high, exactly to this high, and today we have officially hit that. I did start advancing on some shorts in gold today, gold miners. Not to say that this is going to be the exact top, but for me, I start getting skin in the game at the technical levels where it's extended, and I want to be clear, longer term, midterm, I still think gold goes higher. But in the short term, I'm just a student of the charts, right? And ultimately, what I can see is last time it hit here, it came down. In fact, it had a very similar run up, just like here, right? Similar run, and then it gets rejected off there. And so, again, I'm not trying to reinvent the wheel here. I'm just saying, okay, historically, we know that this line rejects price. So after a big move up, I'm looking for rejection on a swing trade, even if I still think gold is going to the upside. So again, I do think gold is a short here. I am short gold, and I'm short gold miners. And we'll look for a pullback on gold here in the next few weeks or so. All right, next up, let's look at silver. Silver's been in purgatory. It's kind of been stuck between resistance and support. Nothing new here. Certainly not the excitement that we're used to on silver. You have resistance up here, support down here. Oil today down just ever so slightly after initially being up. And natural gas just continues to make that bear flag, slowly moving below this support level, which increases the odds of another leg lower after the topping tail was put in here. All right, listen, we're in between earnings seasons, right? So there are a few earnings this week, later this week. I think on Thursday, we have some interesting earnings. But for the most part, this is the end of March. Then once we get into April, mid-April, the big earnings start to be reported again. But we do have the Federal Reserve announcement tomorrow at 2 p.m. That will kickstart some pretty good volatility. And again, the big question I have is the S&P going to roll over and take out these lows, in which case going to August lows of 2024, or can it extend this bounce? Was today just a pullback or some profit taking ahead of the nervousness of the Fed decision tomorrow? Can Jerome Powell say the right things to kickstart a rally that takes this market further to the upside? I will be back tomorrow at 9 a.m. for the game plan, folks. We'll go over some top trades in my portfolio tomorrow. You guys have a great afternoon, great evening, and thank you for tuning in. Take care.
Hey guys, Lawton here with Verified Investing for Legacy Academy again. So it's the end of our journey. Let's see how we stacked up. We ended up rank 176 in the world. I have my stats here. I've completed 40 different milestones, taken 3 different modules, and done 2.5 of another one, and had so much fun. All of this cost me absolutely nothing. Thank you so much to Legacy for sponsoring our videos. It was so much fun. I hope you guys had as much fun on this adventure as I did. Take care. Have a good one. See you later, guys.